Okay, I'm over here at tradingview.com. If you're using a different platform, that's perfectly fine. I just want to use this one because it's easy to use, relatively easy to use, and it's got a free version too. If you go to the free version, this homepage might look a little different, but there'll always be a spot where you can put in a ticker symbol right in the top here. So let's go look at some vaccine, COVID-19 vaccine companies, Johnson & Johnson, Pfizer, and Moderna, and see if there's some buying and some trading opportunities out there. And really the whole purpose is to demonstrate the concept. So that's the idea. We're going to demonstrate some of the concepts here. So you can just type in the full name, like Johnson & Johnson, if you're not sure of the ticker symbol, and it'll start coming up with different things. But let's say I'm just, if I know the ticker, I'll just go JNJ. We'll start with them. You can see also that J&J is listed on a lot of different stock exchanges, so that allows you people in these areas to trade right directly with it. Otherwise, there's things you can do with a broker as far as your broker might support trading with it too. But we're going to use, of course, USC here where I'm at, and we'll see. All right, so here we are. We got Johnson & Johnson. This is their current trading price. And really what you want to get to, and there's always lots of information, by the way, on TradingView, but what you want to get to is on the full featured chart. They might show you like a little mini chart here, but you want to get to the full featured chart. If you're using the free version, you just look for something that's going to look like this little square here. If you're happen to be using TradingView. But the whole idea here is not to teach you TradingView this lesson, it's to demonstrate some of the things here that we're learning. So let's take a look at that. So it shows the long kind of history of it. Along the bottom, we've got E for earnings, D for dividends. This is a dividend paying stock, so it'll pay you income if you hold it for like more than a quarter. Usually it pays out it pays out a dividend quarterly, so there's some earnings and some quarters there. And you can kind of scroll by and move it around, whatever. I just use the mouse to move it down. So let's take a look here. All right, so this was the trading day is live, so we are open. You can see up at the top here what it open, high, low, close was on a particular day. So it opened at 165, highs at 165.31. So it opened at a high, but it's now dropped a little bit. It's it's dropping down here now. So this is you can see why this is red. But I was looking at this one. One interesting thing from a trading aspect is you can see they had a nice run up here. You could really look at it and say, oh, okay, it looks like they had a really nice kind of uptrend here too. I mean, you could go all the way back here as far as an uptrend and see, oh, okay, this is a really good uptrend here. Or even if we were to look at it more from, let's say, from a shorter type view, you can see there was a, nice uptrend, kind of even coming from here. If we looked at that where there was a little bit of a pullback, and you can see that we've got an uptrend there. So with that, they really dropped here on this particular day because they had an announcement, right? This is an event. We talk about events, and for them, their event was they had an announcement that their shot for their vaccine is good, but it's only 66% effective, which in the history of vaccines, as my understanding, is actually really, really good. The problem is their competitors, like Pfizer and Moderna, we'll look at in a moment, they're running about 95% effectiveness. So if you're going to take a vaccine, you want to take the more effective vaccine, right? So that's why they dropped. Also, they weren't as effective in trials that they're showing against a South African strain of COVID. So you can see that's why they had this drop here, and what made them very interesting, we had a gap down, right? So you see the gap down, so we're moving in terms of a gap down. And then the question is, are we starting a new trend? Are we going down or whatever? So you can see they really, closed down. So this is the day because the red candle it closed down. This is the current trading day. And right now we're lower than the close. So this is all happening, but this candle could change by the end of the day. So we will take a look at that in a moment too. Now, one thing with Johnson & Johnson, let's say I'm a long view trader. So I'm not trading a short-term pattern. This is, by the way, based on days. I could change up here to, hours, minutes, whatever I want to do, weeks or whatever. We'll leave it at days here. And, but let's say I'm a long-time believer in Johnson & Johnson. As a person, you want to trade on a long view. So maybe I'm starting my trend line way back here because I'm doing a long view. And I draw a trend line all the way out to here, right? Because we're going to extend it all the way. And we can see, like from here, you can adjust these a little bit. You can see I have 1 touch, 2 touch, 3 touch, 4, broke through, but still closed above or right by there. So that's 5, 6 touches. So a nice, strong trend going. We had the event. It dropped to the trend line, actually went below the trend line as far as the wick or in the closes or the current prices are getting real close to breaking through that. You can see also, how this high volume spike here, that was trading on that bad news of the volume spike. But if I'm a long-term trader, I might say, you know what, that's okay. I'm going to buy on the pullback. And maybe that's something we'll do here is we're going to buy on the pullback. But let's look at some other information. Let's say that we want to look at a moving average, right? Maybe we want to look at a moving average and see how that's going as far as something a little bit more current on there. So this is our long-term trend line, but now we're going to put a moving average over the top of it is what we're going to do. So let's do that. So we're going here. We'll find. Let's put just a regular old moving average, right? Let's put a weighted moving average on there. So we're going to go find moving average. You can type it in the search too. And let's see here, moving average. There's exponential and weighted. Let's just use a regular old moving average. Nothing fancy here. And I'm going to make that color. You can change the style here to make it a little bit more so it distincts out. So let's say let's do orange, and we're going to make this a little bit brighter or deeper so you can kind of see. So as we see here, this is our current trading day. We've crossed below the moving average line and this is a 9-day moving average. They default to that. You can change the defaults, but it was a default to that. So we've crossed that 9-day moving average. So that was a sell signal, right? So this is a sell signal that we're seeing here. But let's say, and again, we're not trying to make it fit, but I'm saying I'm going long on this, so maybe 9 days is too short. Maybe I want to change that input from 9 days. I want to change that to a 20-day moving average. What would that look like if we did a 20-day moving average? Well, it would show that we've approached our long-term trend line. This is a long-term line again, and that we broke through it here on the bottom wick, but we're still above it as far as a 20-day moving average. So that would be an indicator that maybe we're still above, that we're maybe strong here on this. Another thing we could do is, let's say we did it instead of 20, we did 60, right? So let's see if we did 60 on that. 60-day moving average, you can see we're well above on a 60-day moving average. So the takeaway from that in Trend Demonstrate is how if you change your moving averages, that's going to change what you're seeing there. And again, hopefully you heard me talking through it as far as if this might be a play to buy a dividend-paying stock. If you're going to hold it for more than a quarter, you might get a dividend. If you're going to hold it for a year or forever, this might be a great time to buy on a nice little pullback on some bad news regarding the vaccine. Remember, Johnson & Johnson, they do a lot of other stuff in addition to vaccines. They do Band-Aids, is what they're famous for, and they do a lot of other surgical type of support and equipment, and they do a lot of other pharmaceutical drugs other than vaccines. The other thing, too, with Johnson & Johnson, if we look at it from a long view, you could say, well, they're a one-shot vaccine, where Pfizer and Moderna are a two-shot, and they don't need any special refrigeration or anything like that, too. So at some point, as vaccines roll out, let's say, to more developing countries that don't have that specialized equipment, they might, and it's also less expensive, the vaccine for Johnson & Johnson, in addition to being one shot, each dose is less expensive. They might choose, okay, we're going to go with a 60%, 66% effectiveness, because it's going to be so much less expensive, and we can get it out distributed to our citizens, especially in rural areas or in areas that might be more developing. So that's a way you can think through in a long-term view. Short-term view, you'd say, well, look at that. It had a big drop. We're seeing some indicators there. If we go back to our 9-day, we can, or let's say a 5-day, let's go 5-day. You can see, oh, we're definitely below, right? So we've crossed the line, we should be selling. So you can look at it different ways, but a long view person might look at this and say, okay, this is an opportunity to buy in here. Let's look at and try some other things. We're gonna put some other things around here too. Let's look at Pfizer here. All right, so I happen to know that Pfizer is PFE. Otherwise, you could just type it in. We'll go to Pfizer. It's kept our 5-day moving average, so you can see that Pfizer's been kind of bouncing around here, and you can see they had some early good stuff from the trials and things. And this is back when they got it released, so you had this real big, being first in the market. They had a big run up here, and you can see their 5-day moving average line here, and it kind of runs along with it. But we're definitely in a downtrend here, right? You can certainly see that in long-term wise, we're definitely in a downtrend. If we look at this peak and we go down here, I mean, if we ignore that little outlier, you can see we're definitely in a downtrend, and we would want it to cross above that. It's not too far from it, but we would definitely want it to do that, for example. But let's say we're looking more of a short-term trade on this. Let's say, okay, are we still in a downtrend? How's that looking? Well, okay, same deal. We could go up here, and we could see that we've got multiple touches here on our downtrend. 1, 2 touch. These are close. Volume staying pretty steady. It looks like it's crossing above the moving average line. These are down days, but at some point during the day, they're crossing above. So I might monitor this stock a little bit to see, okay, do I wait for it to cross above that moving average? What if I change that moving average from 5, which is a pretty tight one? Let's go to 10. Let's say that's a 10-day moving average, just simple moving average. You can see how things change. Our trend lines are going to stay the same, but now you can see we've changed a little bit as far as along how the line looks. But let's say we also wanted to look at something like relative strength index, for example, is always a good one. And we're looking to see, is this oversold? Maybe this has gotten really sold down and maybe it's oversold. So let's take a look at that as far as another indicator. So we could type in RSI and find relative strength index. And as you recall from the lessons on relative strength index, you want to buy if it's crossing below the 30% line. All right, so here's 30%, and you want to sell if it's above 70% in a typical buy and sell situation. So you can see it's definitely not near the 70%. In fact, it's below the 50%. If we're looking at this line here, approximately, it's definitely below that. It's not reached 30%, but it doesn't have to be perfect. But we could say, okay, well, this is still low. This is like a 37. So we might be watching for a buying opportunity here. So also, what do we see here? An earnings announcement is coming up the next day. So you might say, okay, what I think I might trade on this, and you can see right now we've got a very narrow trading range. This is the current day here. See how that almost looks is like a doji, a very, very low trading range here, and pretty low. So everybody's kind of waiting for that earnings announcement. So recommendation here might be, let's see what happens in the earnings announcement unless we feel we're pretty good on it. And then if that earnings announcement comes up good and it crosses over our moving average line, and if our RSI is going to look good anyways, but it crosses that moving average line, then we might put a buy in here with a nice stop too. Especially if it breaks through this downward trend line. If it goes through both, if it goes through a moving average and the trend line, downward trend line here, those could be good situations for Pfizer. Let's look at, so we might hold off on that. Again, traders look at things different ways, right? So another trader would look at this completely different, and that's fine, or use different measures. To keep it consistent, let's leave our same measures on there. So we've got our moving average at a 10-day moving average. You can see the current day, we're getting a little less volume, but a little bit more wide, or definitely a wider range. You can see Moderna has had this really nice kind of trend up here. Look at that, 1, 2, 3, 4, 5, 6, 7. There was like 7 out of 8 days in a row just in here where it closed upwards, and then we even had closes here. So they've been on a nice little run here. Have a little outlier here, not a full gap up, but it had certainly a nice peak in the range, and then came down, and then we had a closing day. We might look at this and say maybe this is the start of some profit taking, right? So they had a nice run up. They had a big rise up here the day before. The seller said, no, that's getting too high. Let's bring this down. In fact, let's go. We opened the day here, but we're going to close the day here. That's why it's a red candle, right? As far as opening and closing. Open, close on that red candle. So they closed here, and then the open and close is right around the same part, and now it's still trading in the day, but it's trading in this broader range here. So right now, you can see as far as where that is. And we're definitely above our moving average. But look at our RSI. See how it's different than Pfizer? So this might be showing more of an overbought condition. So why? Because we had this big run up here. So if I was looking at this just on these indicators, and I'm not looking, you could look at other indicators too, but let's say you were trading and your primary indicator was a moving average line. Let's say it's a 10-day moving average, simple moving average. And then you were confirming that with your RSI to see from if that's a good position to buy if it's approaching near the 30%. So we look at this and say, okay, right here, or actually right here, all the way back here, we crossed above the moving average line. Our RSI was down way, looking back here around 46, so it was kind of middle of the road. It wasn't 30, but we did cross above that, and we stayed above a little bit, and then we had a nice run up here, and you can see the RSI followed with that. But right now, if we're looking at it from a buy standpoint, we would say, okay, this is above the moving average line. That's good. We've already crossed it a while back before. We've had a nice trend up. That's good too. But right now, maybe we're getting ready to start a trend down because this might be overbought, according to our RSI. So that's another way you can think of it. Now, we don't have a trend yet because we just don't have enough touches, right? We could say, oh, okay, well, let's say, look at this, Steve. We got a downtrend here. If we're looking at days here, if this closed again, touching this line or below this line, and you started seeing more of that, then we might be definitely in a downtrend. But right now, I don't think there's enough information to tell us that we're in a downtrend. Also, we're not seeing spikes in volume. All I would say from this is right now, if I was trading this and I was looking to buy it, I might be cautious because of this RSI. That would be the thing to say, and be watching for this downtrend in terms of that, if this starts to form or develop. So there you have it with some vaccine stocks. And so you can kind of look at them and say, oh, okay, this is different ways you could trade on these different vaccine stocks. In fact, let's bring up Johnson & Johnson while we're talking here. And you can say whether I'm doing a short-term trade or a long-term trade. You see, well, now that we have the RSI up here, we can see here's Johnson & Johnson, middle of the road on the RSI. So here you can see you've got now maybe using those same things together. In fact, if we were trading, let's say maybe this is our best trade opportunity, bad news that came down, close to the moving average line. If we trade on that indicator, maybe we're going to wait for it to go above that moving average line. That would be the rule around that for the crossover. And we're middle of the road as far as the RSI, but we're not at all this peaky stuff. But it would be better if this was down a little bit further here, especially if it's crossing below 30, is what would be more ideal. All right, so there you have it. Again, long-term versus short-term, and how you can kind of look at competitors in this lesson.